I have a thesis called Patient-Driven Care, which is where the patient has a problem that's so urgent that they have said, we're not going to worry about whether this is reimbursed or something. This is something we're going to take care of ourselves.
What happens when one of AgeTech's earliest venture funds evolves and adds longevity to their investment focus? In this episode of the AgeTech podcast, I'm joined by Tracy Chadwell, founding partner at 1843 Capital, who's been investing in this space for nearly a decade. Tracy shares some counterintuitive insights that challenge conventional wisdom. Here's what she had to say. Tracy, welcome back to the show.
Karen, thank you so much. It's so good to see you. I always love talking to you.
Thank you. So it's been a few years since I last had you on the show. Could you share a little bit about the journey that you've been through with 1843 Capital and what has happened in the past, give or take 5 years?
Oh yeah, gosh, I can't believe it's been 5 years. And I just really appreciate you being there from the beginning and your focus on all things aging and how we can age better. And it's also been an inspiration for me as I've worked through my journey building the firm. We started the
Thank you.
firm 8 years ago. Yeah, of course. Yeah, 8 years ago, we started the firm, and I can't believe it's been that long, it's really nice because in this business of venture capital, you really don't know how you've done until 10 years out. And here we are at 8 years, and our first fund has top quartile returns, which we're really excited about. And also, too, our thesis is continuing to grow and evolve. When we talked 5 years ago, no one was really talking about AI. I think we did have a chatbot technology company, but we called it machine learning at that point. We didn't call it AI. So now here we are in a whole new revolution and completely new business models and new opportunities.
That is so exciting. So, in terms of your investment thesis, has anything changed since Fund One until today?
It's definitely evolved. I think if you stay in the same place while the world is moving, then you don't get to see the best opportunities. And I would have called us focused on age tech or silver tech, when we last talked, and we still absolutely are. But that has evolved, and that has evolved to encompass longevity solutions because I think even as people into their 60s and their 70s, they want to make their remaining years healthy and well. We've seen the launch of a lot of wearables and a lot of data that can come off those wearables. So looking at companies that are doing the analytics in that data is a really interesting place. I've also seen some shifts in focus. Both the founders and venture firms are shifting their focus from where people, I think, in age tech traditionally said, okay, here's the easy route is to go to senior living because that's where all the older people are, forgetting that 98% of people want to age in place. So it's a relatively small market opportunity, and it's one where there's not a lot of margin. So if you're just investing in companies that are focused on that market, I think that's a pretty tough one. Likewise, hospital systems, there are some unique opportunities, especially in the cost saving space. And we can talk about a couple of my companies that are helping health systems do that. But unless it's cost savings, it's really hard for them, and especially as their internal costs are going up, their people costs are going up to afford new products for people to make themselves better. So what's been happening? People have taken matters into their own hands. I have a thesis called Patient-Driven Care, which is where the patient has a problem that's so urgent that they have said, we're not going to worry about whether this is reimbursed or something. This is something we're going to take care of ourselves. And so I've invested in quite a few companies that are doing that.
That is fascinating because I think one of the myths about selling to older adults is that most, if not all, older adults are already at the decumulation phase. So people are on a fixed income. So it's very hard
Right.
to get them to pay for something out of pocket. Can you elaborate on how
Right.
you sort of learned or found companies that have managed to do that successfully?
Sure, of course. And when we're talking about older adults, I really like to focus on people that are 50 and older. So while we have solutions that are for 80-year-olds, we have one of the most wonderful dementia and Alzheimer's care companies called Ripple Care, which is phenomenal. And that's a cost savings company where I don't know if you're aware, but $350 billion worth of costs every year come from Alzheimer's patients, which is just crazy. It's actually one of the largest cost centers that there is. But in terms of having capital to spend, we do have a tough situation with, I believe it's 40% of older adults don't have a lot of life savings, and so those they're looking for solutions through Medicare and Medicaid. But then there are, and then remember, there's health savings accounts too that are in there. But then there's also too the rest of the population that then has 80% of the wealth in this country. So there is a lot of wealth that's being spent on both, I say, health and travel, at this point. So people are willing to come out of pocket for certain solutions. And one of our most successful companies is a company called MIDI Health, which is in Fund One. And MIDI Health is focused on women's hormonal health and women's longevity. And that people are willing to pay out of pocket, but it is reimbursed through Medicare as well, which is fantastic. So that's
That is
getting
fantastic.
it's getting preventative care too, because the hormone replacement therapy has now been proven to help with heart disease, to help with things like bone density. So why wouldn't we want to look at those solutions so that we can stave off those costs as we go?
Absolutely. So 1843 is actually one of the first, I think, 3 or 4 funds that emerged to specifically invest in age tech. So you have a long perspective on the ecosystem.
Yes. Yeah.
How have you seen the ecosystem in general changed? Are you seeing more startups these days, less startups, startups tackling different problems today? Because we are in a very different world than we were in 2018,
Right.
2017.
I think that the first startups were focused very much on caregiver communication. That seemed to be the big one that everybody wanted to tackle. And of course, go to market is really, really tough on that one. And we've seen, companies like Keren.com that went public, but it went public at what would now we would call a low valuation, and then was recently acquired. But those companies and things like Honor, which supported people with caregivers, did pretty well out of the gate, but then sort of struggled a bit. I think I've always said you have to come at this space creatively. Everybody seems to be running for the same door, and that door doesn't necessarily open. So we did things like invested in autonomous driving, because one of the things that Joe Coughlin said, and Joe, as you know, is head of the MIT Age Lab and wrote the book, The Longevity Economy. He focused so much on mobility for people as they're aging. And we saw a few companies that were focused specifically on aging, but those had a really tough go to market. They were trying to go direct to consumer, and there wasn't a lot of uptake. But we looked at the autonomous driving space because we knew that people were going to have to get around, and we invested in a company called May Mobility, which was the only one that was wheelchair accessible. So they were really focused on older adults and people with disabilities, but at the same time, building one of the most important autonomous driving technology and mobility as a service, which is what they call it, that we have today. And just recently, in addition to having contracts with cities to drive older adults, they just signed a massive, massive contract with Uber. So now they're a direct competitor with Uber. So that does a couple things for us. It helps people get around. It helps them to get to the doctors and to the hospitals, but it also provides great returns for my investors as well.
That is
So that's what
amazing.
I
And
mean about being creative.
absolutely. And you're absolutely right. And Joe Coughlin's theory on mobility is spot on. It's like the missing
Right.
piece of the puzzle for aging in place. People
It's the
seem to
cornerstone.
Exactly. People seem to think that aging in place is just in the home, but what happens when a person has to leave their home and get anywhere? It's
Right.
not
Right.
it's not so easy, unfortunately.
Right. And I think if you are, and there are some absolutely wonderful groups that are focused on supporting older adults from a philanthropy standpoint and a grant standpoint, those groups should focus, rightly so, on what the needs are. It's harder for us to focus on the needs because we have to generate an above market return for our investors. So what I tend to focus on is who has willingness to pay for some of these solutions. We can do great things, but there has to be somebody at the end of the day that's willing to pay for it, and there has to be a good business model.
Absolutely. That's a really, really important point. So
Yeah.
speaking of willingness to pay, what are you seeing that there is willingness to pay for, but you're not seeing startups serve those markets yet? Or what are the specific challenges that people are like eager to give money away to any startup who will solve a problem, but you can't seem to find startups solving these particular problems?
Yeah, that's a really good question because if I knew that, then it would be really easy to pick the next startup for our portfolio. But I think one of the things that we focused on, and we have picked a few in this space, and there are people trying to do this, is solve for your health now and figuring out ways to circumvent the current status quo in the health system and to start to look at yourself and your body as a place that doesn't have to age per se in certain ways that we've historically accepted. So we don't have to get brittle bones. We don't have to develop cancers. And there are proven solutions to it, but people are now starting to take it into their own hands. They're saying that, hey, I don't want that Dr. Feel Good at the end of the day who's just going to give me a pill to patch. I mean, for a long time, for 40 years, we've accepted that as practice and where we want to go. Now we're looking and saying, we don't want sick care anymore. We want actual preventative health care. And so we've looked a lot in that space. And obviously, MIDI is one of our portfolio companies that's doing that. But another company of ours that's incredibly successful is called Function Health, which tests 160 biomarkers, which is fantastic because then you get to really see, do you have mercury poisoning? Do you have lead poisoning? A lot of these osteoarthritis and autoimmune diseases that people say they just have to live with and use pain medication and steroids, maybe some of those, not all, but maybe some of those situations could be really, really helped by taking a look at what your microbiome is doing. We call this systems medicine, where you don't look at the endpoint, you look at, hey, where did things start? And how can we work to prevent things getting worse or maybe even reverse certain chronic conditions? It's really unbelievable.
It is unbelievable that we finally have these technologies available for us as
Right,
consumers. It's really cutting edge to really
right.
look inside your own body and see what is going on other than doing a simple
Absolutely.
blood
And
count.
a lot of traditional doctors, they're under so much pressure. They really want people to be well, but they're under so much pressure to both please the health system, but then to also please the patient. And the patient often wants a pill. So what they do is they just shortcut. They're on the stopwatch, and they see the person as quickly as they can, test only for things that they have a pill for, like, say, the lipid panel. So your high density cholesterol and your low density cholesterol, that's something that they will test for often. You know why? Because they have a statin they can prescribe. So everybody feels good about that. But it's really encouraging to see that both the public and the providers are moving towards more of this, really the way healthcare is supposed to be, which is preventative, to make sure people
Yeah,
don't come down with these chronic conditions in the first place.
exactly. And we do have examples from specific societies, let's say Japan, where you see
Right.
older adults who are fit, nimble, healthier because the lifestyle is so much different than what we have in Western
Sure.
countries.
Absolutely. Our traditional American diet is killing all of us, and I was really glad to see that our food stamp program, which is called SNAP here in the United
Mm.
States. I don't know if you're aware of this, but 50% of those SNAP dollars were going towards sugary soda
Oh,
until just
wow.
recently. Until just recently. So it's really sad because that is we're paying on the front end for the sugary sodas, and we're paying on the back end for the healthcare after people have ruined their health with those things.
Oh, wow. Really
So it's really
counterproductive.
tough. Very counterproductive. Yeah, absolutely.
Wow. So, you again, like I said, you have an 8-year perspective in this ecosystem, which is quite
Yeah.
rare. What do you look forward to in this new age of AI? Are you looking forward to invest in a single person startup that will be the next unicorn?
Oh my goodness. That could possibly be. I always like tech-enabled services though. So I do really prefer the combination of people with technology. And I think that a lot of software solutions that are just software can easily be disrupted by the next new software solution, especially as our processing power increases and our ability to analyze data more quickly becomes possible. So the things that I'm looking at are places where there's a lot of data to be collected. Obviously, we talked about already willingness to pay, right? So you have someone who's willing to pay for it, but then there's also data that's collected, because I'm sure you've heard this before, but people talk about data as the new gold. And we have all of these AI models that are trained on historical data, where they're only as useful as how clean those data lakes are, number one, but then as they have current information. So there's always going to be a real appetite for more data going forward, as you, especially things like, let's say, drug companies that are producing those things that maybe could help people or turn around a condition, or for people that are in just chronic pain that you can't solve for anything, we could develop more pain medications that are addictive and things like that, and that are really effective right at the pain point. So the precision medicine is creating data. So we're looking at companies where we can provide that newer data, which is really interesting. And then we also have a company, Pluto Health, which is focused on aggregating all kinds of patient data so that we can just get a much better picture of people and get a much better picture of their health, so we can improve their conditions going forward and find out where there's gaps in care, which is really important. A space too where I haven't found anything, but I think is really exciting, is in the robotics space. I think that I'm speaking to a company soon that has a small robotic wheelchair that can get you through the airports. And one of my favorite companies is a company called Skip, which is developing robotic pants that can assist you to walk, which I think is incredibly exciting. And then there's all kinds of other applications where robots can help us do some of the tougher jobs that we can't do, or to help us, with our daily life, to be able to get out of a chair, right?
Exactly. I share your excitement and I can't wait to
Yeah,
have a robotic butler at some point, hopefully in the near future.
right, right, exactly. Although I still want to take my dog for a walk because that's good for me.
Absolutely, but the butler robot can take out the trash.
Yes, exactly.
Um, so, what would you say are sort of your KPIs, the boxes you want to check when you meet new startups or new founding teams? If there are any entrepreneurs in the audience watching us looking to raise their seed round in the near future,
Yes.
what would you like them to have to be able to confidently write a check?
Well, I think, studies and studies and studies have been done on what makes startups the most successful. And over again, you hear timing. You can have a great opportunity, but if it's not the right time, sadly, it's much, much harder to become successful if it doesn't have tailwinds. So that's always something that we look for first, is does this space have tailwinds? The next thing is the team. The team, and I'm sure that sounds kind of trite, but it's really important to us from a couple of perspectives. One is that the team has experience and is networked in the space where they're building. It doesn't have to be directly correlated, but it has to be. They can't rely on their investor to say, "Well, you make all these introductions for me." Oh, and this is the frustration I have with some of the accelerators, is that they're taking people and giving them all these connections, but they're not already in the space. They're not already understanding what the true issues are. And back to, what I harp on all the time, willingness to pay. There can be a lot of things that need to be in the world. It doesn't necessarily mean someone will pay for it. And then I like complementary teams. So I like to see a technical co-founder. I like to see someone who really understands the underlying technology, and preferably has come from a company in a similar space, so they know how to build in that space and they know what some of the constraints and opportunities are going to be. And then I also like to see an eye towards marketing, because I think you can have a really great product, but if you don't have a successful sales and marketing arm, it's very, very tough for anyone to be able to find or buy your product. So I think that all has to be integrated. And people say, "Oh, do you invest in direct to consumer?" And I say, well, even B2B is direct to consumer, because at the end of the day, you have a human being that is using your product, but also you're selling to a human. So I understand the nuance, obviously, of more of a broad-based marketing approach versus B2B sales can sometimes be through channel partnerships, but it's more the idea of how and who are you selling to, and really understanding that, which I think some people get so enamored with and so excited by and focused on building their product that they forget that a good product with good sales is successful. A great product with no sales is going into bankruptcy.
Absolutely. So founder market fit,
Yeah,
technical background, and the ability to sell and market your product, which I think is often, unfortunately, overlooked until it's too late. And that is
right.
part of the reason why companies in our ecosystem take longer to find that product market fit, because it just takes them longer to have that interaction with the large amount of people that you need to find your product
Absolutely.
market fit.
Yeah. And a lot of that has to do with timing, and a lot of it has to do with creativity.
Absolutely, 100%.
Yeah.
So, what advice do you find yourself giving founders over and over again? Whether that's founders who are just, you're meeting them for the first time to raise their seed funding, and maybe you're saying, it's not the right time, let's talk in 6 months. Uh,
Yeah.
or founders who are already in the trenches, maybe founders who have been with you since Fund One.
Right. Well, actually, let's take a step back to the first part, which is that I speak to founders every single day, and we can obviously only do about 3 or 4 of those companies a day. So most of them I'm saying no to. And the number one question they ask is, do you have anybody else you can introduce me to? And so the advice that I give day after day after day after day is you've got to find the right founder investor fit. And so the way to do that is to go and look at the ecosystem of companies that are not exactly like yours, but maybe adjacent. And then go to a database like Crunchbase or PitchBook, and to try to find out who those investors were that backed them originally, because then they will get it, they will understand it. I have a great founder that we just gave a term sheet to, and she had a term sheet explaining in her deck what functional health was. And I said, I think you should take that out, because if someone doesn't understand what functional health is, they're not a good investor for you. They're not going to be helpful, and then they're not going to get the value proposition. So I think you need to find those investors that are aligned with you. It's it's like any other relationship. You have to find someone that really gets your space. And the only way that you can do that is by doing the research and doing the legwork. And then the next piece is to go to LinkedIn and to find someone who can make an introduction to you. And if you are that founder that's been in the space, like I said, is the best kind of founder, the second or third time founder, or you've been in a startup before, you are going to have a way into that investor. And so use that instead of the cold call emails, which are incredibly ineffective. Take the time to do
Absolutely.
your
And
homework ahead of time.
absolutely. And just because some VC has invested in a company like yours doesn't necessarily mean that they won't take the call and won't also write a check to you.
Right.
Because even if someone
Right.
seems like a competitor, it's not necessarily
Yeah,
like exclusive.
exactly. Yeah.
Awesome. So that was actually my last question. Is
Great.
there anything else that we didn't talk about that you would like to add? Any call to action to people in the audience?
Yeah, I think the only thing that we didn't add is that I appreciate everyone who's building a company. I built my firm from scratch, and the really important thing is that you realize that by taking action and by creating movement in this world, you're doing something incredibly valuable. And so I honor and respect that and appreciate everyone who's out there in the trenches.
Well, thank you so much for helping us end the podcast on such an inspirational note. I appreciate that.
Yeah. Yeah, absolutely.
Mhm.
Well,
Awesome.
great to catch up with you, Karen.
Thank you. Thank you so much for joining me on the show again. And
Yeah.
I wish you lots and lots of success with this fund. It sounds like it's already pretty successful, and
Yeah,
it's
we're
great
we're
to
just
see so
wrapping up our
many
second fund. Yeah, and getting ready to launch our third. So, all good
exciting
news.
times. Awesome. Thank you so much, Tracy.
Yes. Yes. Great. Take care, and thanks so much.
If you enjoyed this conversation, you will love my conversation with Abby Miller-Levy from Primetime Partners. I'll put the link right here. Until next time, stay humble, stay curious,